If you follow the instructions given in this video, then I guarantee that you are going to have a strategy that is step-by-step based, and if you stick with it, you will find consistency. How exactly do we arrive to setups that give us trades like this? Step number one is understanding where is the high of week and the low of week is, because this is the most important, significant area that we have over the week. And the high and the low of the week is set on Monday. So if you're lost and you're asking yourself, where the fuck is the high and the low of the week? We have this high, we have this low set. Now, the high and the low of the week can give you a reversal setup and can also be used to predict where the next day is headed. And we use a failed breakout to predict where the next day is headed. So what does that look like? We have the high, we have the low. On Tuesday, price might continue breaking out. But at the end of the day, you find that price closes back inside of the high and the low. This is what we call a failed breakout. And just as the arrow is pointing up like that, it means that the next day there is a very high probability price will continue in that same direction. So if you come to the screen the next day after a failed breakout, if it's at the low, you only look for an opportunity to buy unless price comes back to the high of the week, where we have a situation where the thesis can change. But if we are inside, then the buy bias still stands. Alright. Now that we know how to predict where the market is headed, and before we continue, as long as we are inside of the high and the low, if this day does not break out of the high or the low, that means we can still continue buying until we either reach the extreme high or come back to the low and break out. Now that we know where the market is headed and where to actually look for our setups, when do we actually look for the setups? Because we don't just sit at the screen the whole day hoping that the market will give us a setup. Our specific timing window for Asia is 9 to 11 p.m. New York time. And then for London is 3 to 5 a.m. New York time. And then for New York is the complete opposite of Asia, which is 9 to 11 a.m. New York time. These are the only times that I come to the screen to look for my setups. Now, let's assume we have a buying day. A buying day being that we have a failed breakout yesterday. We had a failed breakout yesterday. So that means if we had a failed breakout yesterday like that, it means that we look for buys today. So what exactly are we looking for? So when we come to the screen, say for example in the London session, let's put this line here representing the London session, the beginning of that timing window from 3 to 5. What we want to see is price coming back to the low of the day. So we identify the low of the day prior to the session and wait for price to break out. Once price breaks out, then we want to see an instant reversal. So all this is on the 15-minute time frame. See a breakout at the low of the day, and then the next candle is a reversal. So gold gave us a very beautiful trade setup exactly like that. So if we look at the high and the low of the week, on Monday, price gave us this low of the week here. Now, Tuesday broke out, closed outside of the low of the week. Alright? So all we do is adjust the low to this level. Wednesday is when we had the failed breakout. We broke out, closed back inside of the high and the low of the week, which told us to buy on Thursday. Now, on Thursday, price remained inside of the high and the low of the week, which means that the bias, which is buy, was still on Friday. Now, on Friday, we had a fail. On Friday, we got a buy setup. So, what exactly are we looking for in that buy setup? So, on the 15-minute time frame, before the timing window, we identify the high and the low of the day. Now, this is the high of the day, this is the low of the day. Now, keep in mind that we are buying. So, what do we want to see? In our timing window, which is from 9 to 11, we want to see a breakout of the low of the day. And you can see that we had this breakout, and then the next candle was bullish. So this is the exact pattern that you are supposed to look for. Once that closes, we go to the 1 minute time frame. And on the 1 minute time frame, we are looking for a suitable entry. Now, the entry is very specific. In an uptrend, price is creating higher highs. So, once price starts creating lower lows is when we start considering to buy. So, right now, price starts creating lower lows, lower lows, lower lows, right? And then what we are doing is we are waiting for this small downtrend to be over so that we can start looking for our entries to go long. And how does that look like? We just need to break structure. And we broke structure on this line here. So we were creating lower lows, lower lows, lower lows. We've not broken structure anywhere. And then here, boom, we break structure to the upside. So once we break structure to the upside, we want to see a retest with an engulfment candle. And that engulfment candle is your entry. The engulfment candle needs to be bigger than the previous candle's body and weak. And then you have your stops at that level, and you will be targeting the high of the session, high of the previous session, high of the day, even high of the week if you want. So, for me, I usually target the high of the day, like that. Then we just let the market do its thing. Now, this strategy is very specific, very, very mechanical, and I can promise you if you stick to this strategy for some time, then you will see consistency in your value from today's video. Subscribe and I will see you in the next video. Peace out.